thank you everybody for taking the time out of your busy schedules. I know it's AEP, and I hope everybody's having a great one for those of you that are doing Medicare. And before I really get started, I just want to say how much we appreciate all of you. The one thing I love about this business is that it is a relationship business, right? That's from the carriers to the FMOs to the agents to your clients. Just like your clients can go to any other agent and get the same products that you're selling at the same price, there's a reason why they're doing business with you, right? And that's because of the relationship that you have with them. And we feel the same way for you. We always say that, you don't work for us, that we work for you. And that is 100% the case. Our success is dependent on your success. As a matter of fact, our slogan is helping talented agents close more sales. And that's what we want to do. So whatever we can do to help you sell more, that's what we want. We want you to succeed. We want to write those big checks for you, and we want to be able to provide you the tools and information so that you can be successful. So again, we really appreciate the partnership throughout the years. Messer Financial continuously grows year after year. In fact, we're one of the largest producers in the country for ACA and Medicare, and we couldn't do it without all of you. And what makes it even more special is the fact that the business that we're writing is actual real business, right? This isn't some phony flipping, a bad business written type entity. We write good business, it sticks, we do it the right way. And it just shows you that if you do it the right way and you don't try to cut corners, the sky's the limit on how high you can grow. And Messer Financial is a great result of that. And again, that's all because of you. So I just wanted to start off by saying how much we really do appreciate everything that you guys do. Obviously, this year has been a chaotic year. It's been an emotional roller coaster, I think, for a lot of you, for not only the agents, but also the clients. There's a lot of worrying going on. There's a lot of confusion, a lot of unknowns still to play, right? So I want to preface this whole presentation, and this is the information that we know today. Things could change tomorrow. They could change next week. But as they continue to change, we will keep you up to date. But everything that I present today is all that we know as of today. So one thing I will say is we got to remember what insurance is, right? Insurance is peace of mind to know that in the worst case scenario that you're going to be protected. And that's why we have to do a really good job in not only being able to provide the products to the clients, but also be able to provide peace of mind to them. In a time of chaos and at a time of uncertainty and a time of change, we have to be the voice of reasoning. So yes, there are absolutely valid concerns out there in the market today, but it does not do any good for anybody for us to exacerbate the unknowns and all of this change with false information, anger, and all kinds of just negative rhetoric towards those to our clients. We have to keep the peace. We are the voice of reason. And I think the best way for us to be the voice of reason is to really understand where we are and also how we got there. I think once you can understand those two things, then we can have a better idea of where we're going in the future. Now, obviously, I don't have a crystal ball. Nobody does of being able to tell the future. But if we can understand how we got here and truly where we are today without all the misinformation and the propaganda and the media distortion of what's going on, then I think we can actually have some civility in how we can explain this to our clients. Because I'm telling you, all of you, when this open enrollment season begins, are going to have questions, hard questions that need to be answered. And we need to be stewards of good information, accurate information, and also of peace. So that's what I'm hoping to bring to everybody, to let us know where we are today. Obviously, we want to know, all the different regulations, the rules that are going into effect, some opportunities and all of that. And we will absolutely get into all of that. So, but before I do, just wanted to show you, as I always do, what you're seeing on the screen right now is our website, messerfinancial.com. All kinds of great information on here. If I scroll down a little bit, you'll see an events calendar. And if you click on here, you'll see all the webinars coming up. We have different products, different carriers, etc., all the time. So just make sure to look at this, see what you're interested in, and make sure to tune in on those. And also, one of the biggest things, folks, is if you haven't done so already, be sure to create an account on our website. You can go right here to Agent Login, and there'll be a place that says Create an Account. Go ahead and do that if you haven't done so already. And what you'll get is a whole bunch of useful information. I'll just show you real quick. So, for example, ACA information and certifications. If I click on this, It'll tell me all about FFM certifications. If you want to know about state exchanges, that's available. Carrier heat maps, obviously, we haven't got all the information yet. I will go over the carriers that I do know at the very end, so make sure you stay till the very end because there's a lot of useful information that I'm going to be sharing. Also, carriers by state. So if I click here, there's a nice little map that you can see at the very bottom that shows all the places. So if I want to see what's available in North Carolina, I click right here. If you notice, Aetna has already been removed. That's a huge carrier, folks, that's leaving the market. Aetna will not be there, but it shows you all the available carriers for 2026 that Messer Financial has. And you can pick any state. You can also have here, same thing. If you want to see North Carolina, there you go. There's all the different carriers. I always recommend to get appointed with all the carriers because we don't really know who the carrier beat is. I mean, obviously we can go by as much information that we have, and quite frankly, this year has been delays on everything. We still don't know what the commissions are going to look like for the most part. We don't know what the bonuses are going to look like, and quite frankly, we don't know who the most competitive are. But I could give you my thoughts. I will share all of those at the very end. But my point is you still want to get appointed with all the carriers that you can in the states that you're marketing. There's no appointment fees, and there's no production requirements for most carriers. And we can obviously discuss all of those when you speak to one of our marketers. And again, folks, like I said earlier, this is a relationship business. If you have not contacted us, and if you don't have a relationship with one of our marketers, I cannot stress enough how important that is to have. The more we know about you and your business and your goals and your plans, the more we can figure out how Messer Financial can help you fill any needs that you have. Because again, like I said, we want to do everything we can to make sure you have everything needed to be successful. So please, 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 if you haven't done so already, contact us, speak to a marketer, go over and really build a relationship with them, because the more we know about you, the more we can help. So with that, I'm going to jump right into the presentation. I know we have a lot to cover. There will be time at the very end where Jeff Street and I will be answering those questions as much as we can. Again, we don't know everything. There's still a lot of unknowns, but we will do our best to be able to provide the information. The title of the presentation is What to Expect with the ACA Landscape 2026, and I will absolutely go over everything you need to know for 2026. But again, I really want to show you, because a lot of people are thinking that the ACA is combusting and all this misinformation about the ACA. The fact of the matter is, folks, the ACA has been relatively chaos since the very beginning. And I'm going to go through a quick timeline for you guys on just how that is to show you exactly what I mean by that. I know a lot of you have just recently got into the market. So again, I really want to make sure everybody's up to speed with where we are today and how we got here. So here's some of the things that we're going to cover. What each administration considers success when it comes to healthcare. Whether you're Republican or Democrat, they all pretty much have the same measurement. So I will show you that, and there's a reason why I'm starting off with that, because it is a huge point as things are kind of a little different this year than it has been in the past. So I'll get into that. Evolution of health insurance, the rise of the ACA, changes for 2026, ACA rules and regulations. Like I said, there's a lot of changes and regulations that have come in and gone out in this year. Key changes to subsidies, and I think this will probably have the biggest impact on all of your clients. And we'll discuss that as well. Catastrophic plans expansion. With all these changes, this is going to be a huge deal. Income. I know that a lot of people are concerned about the income and supplying the proof of income, so we will discuss that. SEPs. Obviously, there's been some changes in SEPs. Opportunities. There's opportunities everywhere, and I will discuss those as well. Retention, which is the most important thing of anything that we do in health insurance, and why Messer Financial. And then, like I said, at the very end, I'm going to go over some specifics that haven't even been released yet. So again, make sure you stay till the very end. All right. What is considered success? Whether you're Republican or Democrat, when you come into office, there's really one measurement of success. They want to be able to say, when I took office, when I came into office, there were this many people uninsured. And when I left office, I was able to lower that number to whatever that number is. That is the true measurement of success. Nobody, at no administration, wants to be able to say, hey, I have more uninsured than when I took office, because that would show some type of failure. The idea is to make sure everybody is protected, because again, what is insurance? It is peace of mind to know that no matter what happens, that you are insured and that you're going to be taken care of. That's the whole main purpose of insurance. So I want to stress that, because obviously, depending on what happens with these enhanced subsidies, that could be a difference, right? I mean, if they remove these enhanced subsidies and the premiums go up, there could be a lot of disenrollment. And how's that going to have effect on the market as a total? So we'll discuss all of that here in a little bit, but I wanted to make sure that I at least explained that there is one measurement, and that is having uninsured versus how many uninsured at the very end. All right, evolution of individual health insurance, and I want to start off by saying, for those of you that don't know me, um, I actually started my health journey at a small company called Coventry One, and I started that in 2010, and that was pre ACA. So that was back when plans were actually medically underwritten, and quite frankly, no agent made individual health insurance their main focus. And even when I started in the individual market, I was just doing that as kind of like a placeholder to get on the group side. That was where my goal was. I always wanted to get on the group because that's where the guys were making the big bucks. They had the big books of business and they were able to help so many different people. So when I started in health insurance, I was on the individual side, hoping to get on the group side. So, like I said, pre-ACA agents really never focused on individual health insurance. Agents primarily offered it as a service to their clients that were coming off of group insurance, right? So, hey, I've got a group here. I've got a person that's coming off of that group, leaving their employer. They need individual health insurance. I'm going to offer it them. That way I can still keep them in my family, right? Plans were medically underwritten. I can still remember my medical underwriting guide. Carriers could rate up the plans. They could put riders, or they could even decline based off of risk factors. So, you got to think of when you think about health insurance, you got to try to think about who needs the health insurance the most, right? And quite frankly, the people that need it the most are the people that are in the lower income or people that have pre-existing conditions or are unhealthy. They're the ones that need the health insurance the most. And if an individual health insurance policy is medically underwritten, or it could be rated up because of pre-existing conditions, then you're kind of eliminating that whole point. So that's where President Obama, when he came into office, he saw that. And that's where the ACA came in. There were high-risk pools available to those who could not qualify for health insurance due to health issues, but a much higher premium, making it unaffordable to most. So, for example, I had a client who had exhausted their COBRA. They were coming off of their group plan. They exhausted their COBRA, and they needed health insurance. Well, unfortunately, they couldn't be underwritten because they had health issues. So we ended up applying for the high-risk pool. She was approved, and guess what? Her health premium came out to over $3,000 a month for the health insurance. So unfortunately, she didn't have any other options, so she had to take it. She ended up getting everything that she needed to have covered, and then drop the plan, of course. I mean, at that time, people were literally going out and getting jobs just so they could get health insurance because there was no other option for them that was affordable. So obviously, there was a huge hole for clients that were unhealthy and could not afford the insurance. But on the other side, for people that were relatively healthy that could get through medical underwriting, the insurance premiums were incredibly affordable. I can remember being a 28-year-old and being able to get a $5,000 deductible, 100% co-insurance plan for like $90 a month. So obviously that was extremely affordable for me, but was I the quintessential person that needed the health insurance the most? No. So obviously there needed to be changes. So that was when the rise of the ACA came in. The Affordable Care Act was signed into law on March 23rd, 2010. People think that it was signed in later than that. No, it was signed in 2010. And as a matter of fact, I can remember sitting in our office hearing this, that, hey, guess what? They're going to subsidize health insurance premiums, and they're going to no longer be underwritten. And not only that, you were going to get penalized if you didn't have health insurance. Now, me being in sales and also an agent myself, I said, yeah, let's do that. I mean, if you can't sell something that is subsidized, that's not underwritten, and it's penalized if you don't have it, then maybe you should rethink your business and sales, right? So most people in Congress did not have time to read the entire bill before even voting on the ACA. It was a very long document, and it was like within a week, people had to vote on this thing whenever it was presented to them. So nobody actually read the whole document, and the people that did read most of it, it was very hard to understand. So a lot of things unknown, but it had to be so quick that people were voting. And because, again, it was filling a hole that was very much needed It did pass with flying colors. The first Affordable Care Act enrollment period began on October 1st, 2013 for the 2014 plan year. So just to give you a spectrum of how much this impacted my business, in North and South Carolina, the year right before the ACA came out, we did about 28,000 enrollments for the year. When the ACA came out, then the first 3 months, we did 125,000 enrollments. Now, granted, I would love to say we did that because I'm such a great salesperson, but obviously, when you release the restrictions off of getting and the availability of getting health insurance, then those numbers increased dramatically. I can remember the very first year, within the first couple months, we had a client who had hundreds of thousands of dollars worth of medical bills covered now for the first time, that he was literally waiting and waiting for this to come out to get all this covered. And guess what? His monthly premium was 17 cents. So was it beneficial for him? Absolutely. And was he the quintessential person that needed the health insurance? Absolutely. So in that regard, it was absolutely fantastic, the best thing ever. So, however, when it did launch, there were issues. The federal marketplace experienced numerous technical glitches and stability issues when it first launched, which were not fully resolved until December 3rd, 2013. People were up until late at night trying to enroll people because they couldn't get the marketplace to go through. And then also, like I said, tax penalties were put into place if a person did not have health insurance. All right, so again, challenges with the ACA. Agents weren't being attached to the policies and not receiving credit for their sales. So as great as an opportunity as this was for agents, and how unbelievable of an opportunity it was to sell with all the regulations gone, they definitely had their challenges. Like I said, healthcare.gov crashed on a regular basis, and workers were regularly providing misinformation to customers and agents. As a matter of fact, when I'd call into the marketplace to speak to a representative, the information was so bad that I immediately would ask for it to speak to a supervisor. I would just try to skip all of that. But if you think about it, there's two options that the marketplace could have done. They could have either been understaffed and highly trained, but then that would have resulted in incredibly long hold times to get anybody on the phone, right? You could have been waiting hours to get a representative. So they chose the latter, where they hired a bunch of people, and because it came on so fast and there were still so many things unknown, you were getting a lot of misinformation. So it's kind of one of those, do I want to get somebody to answer the phone quickly and give me misinformation? Or do I want to wait on the phone for hours to try to get somebody and they get accurate information, right? So you pick your poison with that one. And also, it was so new, and this is something that was completely uncharted, that carriers were not sure how to price the plans to the premiums. And then they would have dramatic increases year after year, because the first year, no matter how high they made it, it still wasn't high enough. And they had to keep raising the premiums every single year. And when the premiums are almost doubling every single year for the first couple of years that the ACA was available, that's not very sustainable, right? And it wasn't sustainable in the current environment. So we knew things were going to change. And as a matter of fact, I left Coventry One in 2015, and I can remember talking to my boss, telling him that, man, this does not seem sustainable. I can't put all of my eggs in this one basket. I don't think that this is going to work. And thankfully, at that point, at that almost exact time, Messer Financial was hiring, and I was able to go and join the Messer Financial team and really broaden my portfolio. I always say that you shouldn't put all your eggs in one basket, because in this industry, it's all about being in the right place at the right time and being able to pivot wherever those opportunities are. And if you put all your eggs in one basket, then you're going to have a rough road if you're doing this long term. All right. So as a result, guess what? The carriers started exiting the market in plan year 2017. I can remember in 2016 sitting with United Healthcare. And this was probably, I think, August of 2016. We had the management at Messer Financial sitting with the upper management with United Healthcare. And United Healthcare was telling us how they're going to have the best plans, the best network, the highest commissions. And folks, this was back when they were paying a percent of the premium. So we're talking like 14%, which was insane commissions. So we're so excited. I'm doing all this marketing. I've got mall kiosks going. I've got all kinds of resources going out. And then guess what? October of 2016, United Healthcare revisited us. And they notified us But actually, instead of getting paid 14%, you're going to get 2%. And then come January 1st of 2017, your commissions will be zero. So when you talk about now being the absolute worst time ever for ACA, that just shows me you probably haven't been there in 2016, 2017. That was absolutely devastating. And God help us, thankfully, we'd have all of our eggs in one basket. Yes, we were one of the top producers at ACA at that time, but thankfully, because we had a broad portfolio of Medicare and life insurance, even that year that all the carriers pulled out, Messer Financial still grew 2% overall as a company. So even on a year like that, we still grew, which is phenomenal. So again, always make sure that you can pivot where opportunities are. So major carriers that pulled back, United Healthcare exited all but a handful of markets. Aetna exited most of its ACA marketplace plans in 2017 due to financial losses, though it did not fully exit every market that year. Humana exited, Cigna exited, Anthem pulled out. Other carriers, most of the Blues. There were states, folks, that did not have an ACA option at all, period. So was that a tough time for people? Absolutely. So again, when I talk about the chaos now and the concerns and everything, let's just put everything into perspective for the whole lifetime. And this was back in 2016, 2017, years ago, almost 10 years ago. The reason for the exiting most of these carriers was financial losses. The primary reason cited by most carriers was financial losses from the individual insurance market. And again, I'm saying that knowing that each year that the marketplace was available at that time, the premiums had almost doubled. And even then they weren't priced correctly. So again, carriers were still guessing and trying to figure all of this out. The insurance pool, some insurers stated that they ended up with sicker and older customer base than they had anticipated. That will happen. When the premiums get really, really high, guess what's going to happen? Healthy people that aren't qualifying for large subsidies are going to leave the market. And if all that you have left in the ACA are sick and unhealthy people and lower income folks, that's just not going to work, guys. So the point is to make a system like this work, you got to have everybody involved. And I just want to preface this. So, a lot of times we don't want to talk about politics. And I get that. I don't really like talking about politics either. But if you're in the ACA or Medicare, any health insurance business, then guess what? Politics play a huge part in our business. And I think it's really important, too, to know the difference. I'm not going to, and believe me, I am not going to tell you which side you should be on or anything. I am going to state based off of, I'm pretty good at arguing both sides of it. Because the reality is, Democrats and Republicans are both right. And they're both wrong. I'll explain. So Democrats, they understand that the way that the ACA can work is that they need to have everybody in there, which is why they penalize folks for not having it. They needed that. However, from a Republican standpoint, they believe that you can't penalize greatly someone else to pay for someone. And if you do that, then they're just going to leave. And that doesn't work either. So the Democrats are right in the fact that we need to be able to provide health insurance for those that are sick and that can't afford it. Republicans are correct in the fact that you can't rip off somebody else to pay for somebody. And here's a good example. So let's just say that you're a middle-aged man, you're healthy, and you don't qualify for a subsidy. Who is taxed the most to pay for this? Those people that I just described, right? But not only that, they get hit again because they're also the ones that have to pay the full price for the premiums. Now, I could understand paying more for the taxes if I could take advantage of the tax breaks and get subsidized, right? Like if I'm paying for someone else to get a zero premium, then shouldn't I be able to be eligible for a zero premium as well? Why should I have to pay the most taxes and get hit on the premiums as well? Well, that's the problem, right? And as a result, people aren't going to do it and they're going to leave the market. And I preface all of this because it's going to happen big time this year. And I'll explain all of that later. But I just wanted to make sure everybody understood. Both Democrats and Republicans are correct, but both are wrong in how they're executing it. Republicans don't really have a plan to fix what this is, at least not one that I've seen that they've released. And Democrats have a solution for it, but obviously it's not sustainable in its current environment, which is why every administration, when it comes in a new administration, there's always going to be changes. So if you love the ACA, sorry, things are going to change. If you don't like the ACA, just wait. It's going to change. Maybe for the better, maybe for the worse. But all I'm saying is it continuously changes and evolves. All right. Now, insurance carriers began returning to the Affordable Care Act marketplace starting around 2019. So 2017, they exited. 2019, they began coming back in, following a period of uncertainty in 2017 and 2018 when many had either left or reduced their offerings. A significant factor in renewed participation was the stabilization of the ACA market, driven by legislation and administrative actions. So basically, the government was saying to the carriers, look, we've got your back. We'll help you through these hard times. Okay, so that was like, okay, well, we're going to get back into the market. Then 2021 came. We all know what happened in 2021, right? That's when COVID was hitting. Things were shutting down, and people needed health insurance more now than ever. So, as a result, President Biden signed the American Rescue Plan Act of 2021, otherwise known as the ARP, into law. ARP makes major improvements in access and affordability of health coverage through the marketplace and increasing eligibility for financial assistance to help pay for marketplace coverage. What they did, folks, essentially, is they removed the 400% federal poverty cap. So that means if you made too much the previous year, your income was too high to qualify for a subsidy, now there was a good chance that you did qualify for a subsidy. And also, they spent billions of dollars, in fact, $200 billion were added to the marketplace. So if you were already in the marketplace and you were qualifying for a subsidy, they were adding to that subsidy amount. So now it even reduced your premiums even more. The new law will lower premiums for most people who currently have a marketplace health plan, expand access to financial assistance for more consumers. So more people were eligible. The people that were eligible are getting more money, and you talk about an absolute gold mine for the ACA, that's when the enrollments exploded, right? That's when all the agents were writing more business, more people coming into it. The entire enrollment pie, if you take it as a pie, was growing exponentially, right? It wasn't now just moving people from one carrier to another carrier. It was actually new people who had never received health insurance before were now receiving health insurance. So the number of the uninsured went way down, and rightfully so, right? They added an SEP for the folks that were 150% federal poverty level or lower all year round. So now you can literally sign up anytime you wanted to if you reached in that federal poverty level. So, I mean, you just take something that was already growing and then just exacerbated it extremely by adding all this additional money and loosening the qualifications of who and when you could enroll into the marketplace. So because of the ARP, premiums decreased on average by $50 per person per month and $85 per policy per month. 80% of enrollments were able to find a plan for less than $10. So I want to make sure that I stress that first stat right there. 80% of enrollments were able to find a plan for less than $10. What does that mean, though, folks? It means that over 80% not only qualified for subsidies, but qualified for large subsidies. Okay, so put that into perspective of all Americans that need individual health insurance. What does that mean? That means that the majority of the people that were healthy that did not qualify for large subsidies found something else. The short-term medicals, the Christian Medicare plans, whatever it is, indemnity plans, etc. Now, that's another thing that's a big difference between Democrats and Republicans. Democrats understand, again, that they need everybody enrolled into the ACA for it to be sustainable. So what they want to do is they want to remove plans like short-term medical. They want to remove plans like Christian Medicare plans and these other health plans out there. They want there to only be the ACA, because if there's other things available, then others are going to go to it. Where Republicans feel that because you're relatively healthy and because you are making a higher income, that you shouldn't be penalized and you should have affordable options even for them. So the Republicans' response to that is, we're going to bring out the short-term medicals and all these other options that are available. But again, the problem with that is it's going to hurt the ACA. So like I said, both are right in their convictions, but they're both wrong in the execution of it. We still haven't figured out the perfect plan. And I mean, I can give you my thoughts, but at the end of the day, we still haven't quite figured out, at least the government hasn't. So new carriers came into the market, current carriers expanded into new territories. Folks, at this time, it was like the carriers couldn't make more money. They were literally just flooding money out to agents. They have high bonuses, higher commissions, better benefits, lower deductibles. Everything was just like the prosperous time for ACA. I mean, I can remember Bright Health coming down to South Florida with suitcases full of cash for agents for co-op dollars. I mean, in fact, Bright Health one year had their rollout meeting on a yacht in Miami, a yacht. So I don't know if that's just money management. I think we know what happened to Bright Health at the end. So maybe they didn't manage the money very well, and maybe things weren't as good as everything seemed. But again, it exploded the entire market. Affordability. Now with enhanced subsidies in place, the vast majority of people buying individual market coverage are subsidized. Again, like I said, if you weren't subsidized, chances are you probably weren't getting it. Especially for the high deductibles that they have, right? Like, why am I paying full price for someone who's healthy to have a high deductible plan? I can understand that it was free to me, but I'm not going to pay a high premium for it. At least that was the mentality. So the Inflation Reduction Act continues subsidies without interruption for 3 years through 2025, which is this year. And guess what? That's what's happening. So the Inflation Reduction Act, which was the American Rescue Plan, is coming up to an end. And I want to make sure that that's perfectly clear. Subsidies are not going away. The enhanced subsidies are going away at the end of this year, at least as it is right now. Whether they stay or go, it's about a 50-50 chance right now. It's hard to say that. I mean, it's October 22nd. I'm saying it's a 50-50 chance whether or not we have that enhanced subsidy. We still don't know. In fact, the government's shut down because of this. So when you say that, hey, I don't want to talk about politics when talking about the ACA, I don't know how you do that, because literally it's why the government is shut down. All right. So when I talk about the sustainability of the ACA, I want to preface it by saying, on this first stat, for the 2024 open enrollment period, brokers were responsible for nearly 80% of active enrollments in the federal marketplace. So I want you all to think about that. You've got a system, a health plan, that you can literally go to healthcare.gov as a client, quote it yourself, enroll yourself, and never use an agent. But 80% of the 24 million people that were enrolled into the marketplace found a value in using an agent. Why? Because health insurance is complicated. Changes happen. It's hard enough for us as agents to be able to keep up with what's going on. Can you imagine for the layman person out there? So what does that mean? That means that there is a need for agents, right? And what's the best way to keep agents in the business? You have to pay them. So as long as there's an ACA, there will be agents involved in some way, shape, or form. The growth trend. This is a continuation of a trend seen in previous years. For instance, healthcare.gov reported that in plan year 2020, nearly half of all enrollees were assisted by an agent. So we went from 2020, where about 50% of the enrollments were done by agents, to 2024, where 80% were done by agents. The need for agents just keeps growing every year. Broker assistance. Agents and brokers are credited with assisting with a large number of both new and returning enrollments. So not only do we help them enroll, we help them every year after that, right? I'm not just your agent this year and I'm never going to talk to you again, like a lot of these lines of insurance. I have to speak to all of my clients every single year, especially before open enrollment, to make sure that they understand what's going on. Because agents are working with both new and returning enrollments, this contributes to greater participation in the individual health insurance market. We want our clients to feel comfortable talking to their doctors. You know, the whole point is to try to keep people healthy. We don't want to wait until something horrible happens and then try to deal with it. We want to try to prevent it from happening. And the only way to do that is by keeping your doctor up to speed with what's going on. CMS initiatives. So even CMS is trying to help agents by coming out with a system called Help on Demand. If you don't know what Help on Demand is, go to healthcare.gov, find out. It is literally a free lead source for agents. You can put in the times you're available. And if a client goes to healthcare.gov and they click on the button that says help or find agents, I forget exactly what it says. They'll go into a database, and because you're in there, they're going to refer it over to you. A free lead system provided by CMS. That's big. It shows you that CMS is very pro-agent. That was everything that happened up to this year. So I hope you got a good understanding of how, if you want to look at the ACA marketplace, it's kind of like the stock market, right? It goes in waves. We're just going up and down and up and down and up and down. 2021 to 2024 was when it was at its absolute highest. But if you want to say that 2025 now was at its lowest and this was the stock market, what do you think you should do? Do we sell high and buy low? Absolutely. That's what we're doing. If you get out of the market now, that you're coming in at the lowest, you're getting out the lowest point. And that's not right. The corruption that was done, and as much as I love 2021 to 2024 for ACA, the corruption was so rampant that it made the business unsustainable. If I write a client today and it's gone tomorrow, what are we doing? You know? The bad business, the bad leads, the bad everything that was going on. So as great as the ACA was at that point, was it really that great? I talked to some of the largest call centers in the country, and I see them writing thousands and thousands a month. But when you lose 40% the next month, what good is it? You know, if you want to sell something and never get paid on it again, then go sell real estate or cars or whatever. But if you want this to be a long-term viable business, a one that we can work so hard now so we don't have to work later, we do this for the residuals. We do this for the renewals. We do this for the monthly premiums or the commissions, and to help people, of course. All right, here's some key changes for the plan year 2026. And I'm sure a lot of you have, been on other webinars that have discussed these or, conferences or whatever it is. So I'm not going to spend a ton of time, but I will go over these, just some of the few highlights. So DACA recipients will lose ACA eligibility. This is a sad thing. This will also decrease the amount of people that are enrolled into the marketplace. DACA recipients are no longer marketplace eligible effective August 25th. So it's already passed. The special enrollment period for the 150% federal poverty level is gone, effective August 25th. Open enrollment period stays the same this year. So it's still going to be November 1st or January 15th. There will be no change. However, the OEP will be shortened as of now, as it stands now, in plan year 2027 to where it's going to end on December 15th. And another one is some states and carriers have eliminated the use of NPN overrides. I'm sure you guys have heard that, but those of you that don't know what an NPN override is, that means submitting business under somebody else's NPN. United Healthcare and Amber are the two carriers that have announced that they will not allow NPN overrides. The states that are not allowing it are Iowa, New Hampshire, North Carolina, South Dakota, Wisconsin, Florida, and Michigan. And the last key plan change for 2026 is the automatic 60-day extension for applicants to provide documentation to verify household income inconsistencies is removed, and income verification is required within 90 days instead of 150 days. And that went in already into effect. However, this open enrollment period, folks, is probably going to be pretty similar to how it's been. I know a lot of people are worried about the proof of income and all of that, and I'll talk about that in a second. But honestly, with all the different changes, I know they came out with a bunch of regulations at one point that really concerned a lot of us. You know, the $5 rule on the $0 premiums if they auto renew, those type of things. But those have been ordered by a judge to be on a stay, so they will not be into effect, most of those, for open enrollment. The ones I just mentioned are in force. And here you go. This is just basically a summary of what I just said. Like I said about the auto renews, the PTC and auto renewals, plan year 26 $0 members with auto renew and fail to verify eligibility will be subject to a $5 a month premium. That has been on stay. So that actually helps us out quite a bit. Most of these are on stays, if you notice. But what's really the most wild about all of these new regulations is the fact that most of them are going to sunset at the plan year 2027. A perfect example is the SEP, the 150% federal poverty level SEP. Yes, it has gone away effective August 25th, but guess what? Plan year 2027, it comes back. a lot of these rules that are coming in for 2026 are going to sunset and they're going to reopen everything. So basically, and the reason why CMS is doing this, and this is per CMS, is they're trying to clean up the marketplace. They're saying that right now there's about 4 million people that are enrolled into the marketplace that shouldn't be or do not even realize that they have a health insurance plan. Once they clean it up and they start requiring members to prove their income and things like that, then they're going to feel much more comfortable in 2027 opening it back up again. So it's kind of like one of those things where 2026 is, let's get through this year, and then 2027 is going to explode again, in my opinion. All right, key changes for 2026 subsidies. This is going to be the biggest impact for your clients. The average premium increase, if they do not extend the enhanced subsidies, for enrollees is projected to increase by 114%. From approximately, the average premium right now for a member is $888 a month. That's going to go up to $1,900 in 2026. That's a huge increase. Actually, if you think about it, $888 for an average premium, monthly premium for an individual is extremely high in general. But $1,900, that's absurd. So when I was talking about earlier, those folks that are relatively healthy, do you think that they're going to pay $1,900 a month if they don't qualify for large subsidies? Absolutely not. The impact on low-income enrollees, let's talk about that, because that's obviously 80% of the market. Those who are currently paying $0 for a benchmark plan will likely have to start paying for coverage again. And again, folks, the subsidies are not going away, the enhanced subsidies. There was a time pre-2021 where there was ACA that didn't have enhanced subsidies. The only difference now is the premiums have gone up dramatically, but there are still people that are going to qualify for zeros. There are going to be still highly subsidized folks. So for example, a 35-year-old couple earning $30,000 could see their annual premium increase to about $1,100 a year annually. Loss of subsidies for higher incomes individuals and families earning more than 400% of the federal poverty level who are eligible for the enhanced subsidy in 2025 will lose their eligibility for any premium tax credit at all in 2026. Older enrollees face steeper hikes. Like I said, before the American Rescue Plan, there was a cap at the 400% federal poverty level. So if you were at or above the 400% federal poverty level, you're ineligible for subsidies. Well, that's coming back. Older individuals are expected to see larger premium increases. A 60-year-old with an income just above the subsidy cutoff, $62,700, could pay nearly $9,600 more annually, while a 64-year-old could pay over $11,000 more annually. You think that's going to affect the enrollments for elderly? Absolutely. Assuming median 18% premium increase from insurance. But let's put it this way, folks. 18%, I would take that right now. The problem is most large volume areas for enrollments is going to be more like 30 to 40% increases. So it's ridiculous those numbers are. It's going to be twice that in other areas. So like I told you before, you can't put all your eggs in one basket. If you're not familiar or up on short-term medical policies, hospital indemnity policies, all these other things, please contact us. We've done webinars on them. There's also webinars on our website. You can go back and watch at any time. But these plans are going to become very valuable for these folks, for those that at least can get through underwriting, right? So obviously the subsidies, enhanced subsidies is a huge issue. I'm sorry that I don't know what's going to happen. If you'd have asked me a month ago whether or not I think they're going to go through, I would have said absolutely I do. But as the government shutdown progresses, the odds keep coming down. And right now, I'd say it's about a coin flip, quite frankly. And actually, Vegas even has it. They have a betting site where you can actually bet on whether or not the enhanced subsidies. And right now, Vegas has the line at 48% chance that they do not come back. I'm sorry, that they do come back. 48% chances that they do. So it's actually a little bit more leaning towards the fact that they're not going to come back. I don't know what's going to happen, but like I said, the longer it goes on, the less likely it is. And if they don't have an answer by November 1st, then most likely what will happen is they're going to extend the open enrollment period. They're going to give you an SEP. And you're going to have to go back and all those people that you signed up for November 1st, you're going to have to re-quote and re-enroll them into plans. Now, catastrophic health plans expansion, that's going to be big. It used to be where you could only sign up for a catastrophic health plan if you were under the age of 30 and experienced a hardship exemption. But now they've changed that, which is going to be huge for folks, especially those that don't qualify for subsidies, little to no subsidies, or just have massive increases in their premiums. Catastrophic health plans are 100% deductible plans, 100% co-insurance plans, I'm sorry, with you get 3 office visits a year, free of charge. And let's just see what the eligibility is. So general eligibility, under age 30, anyone under 30 can purchase a catastrophic plan directly. Hardship or affordability exemption. If you're 30 or older, you must qualify for one of these exemptions to be eligible. So let's see what that is. Individuals who are projected to be ineligible for advanced premium tax credits or cost sharing reductions due to their annual household income will be eligible for a hardship exemption. So if they don't qualify for subsidies, you can sign up for this. So if you're sick or have pre-existing conditions and you need a health plan, you don't qualify for a subsidy, that is going to be your golden ticket. It's much more affordable. And again, it's 100%. You get 3 visits a year, and plus your preventative care is free of charge as well. This includes those with income below 100% of the federal poverty level and those that are above. So like I said, the 400%. So like I said, now that they're capping at the 400%, these catastrophic plans are going to be crucial for a lot of these folks. Now, unfortunately, the catastrophic health plan is not available in all areas, but it is in a majority of them. So if you have people that are at the 400% federal poverty level or above, you need to be discussing this. If you have people that are not qualifying for subsidies, you need to discuss this. The application process for these exemptions is being streamlined and is available through healthcare.gov through state-based exchanges. And key features, like I said, low premiums, high deductibles, essential benefits, preventative care, and free office visits. Consent reminders. This is the most important thing, folks. You need to have consent from the client that you can pull their information. You need to have consent from the client to enroll them into a plan. And there's a third part that's very crucial is you need to have consent from the client that you enroll them in a specific plan. Because a lot of times whenever there's complaints, they complain that I gave them consent to enroll me into a plan, but not into that plan. Make sure that that's all listed in your consent, whether it's in writing or it's verbal recording on a phone call. I always recommend getting your having anything that you do, especially virtually through telesales, get it recorded. Income, for those of you that don't know, you're using your MAGI, which is your modified adjusted gross income. Pretty easy. You can look it up how to determine your MAGI, but that's how you determine what it is. Now, remember, folks, the income is based off of an estimate of what you think you're going to make the next year. So for 2026, it's based off of an estimate of what you think you're actually going to make in 2026. Now, one thing that that the marketplace is doing is they're coming a little more strict on proof of income. So if you have somebody that they think that their proof of income is going to be much lower than what they filed on their taxes last year, if there's a big discrepancy somewhere in there, then be ready to show proof of that. You also might want to make sure that your clients have their tax returns available, especially if they didn't file it last year. Make sure to go ahead and do that. Okay, but for all intents purposes, it's going to be pretty much the same. Some proof of income is pay stubs, tax returns, wage and tax statements, self-employment documents, social security statements, unemployment benefits letter. So basically, I mean, there's really not going to be much changes as far as that goes, but they are going to be requiring it if there are discrepancies. Plus, if they have an SEP for next year, they're going to need to probably provide proof of that. That's one thing about when the American Rescue Plan was, nobody was even auditing anything, right? It's like, hey, what's your SEP? I'm coming off of a group plan. Okay. Or I'm coming off of this plan. Okay. We're not going to even ask for any proof. We'll just take your word for it. Special enrollment periods, life changes, special enrollment, changes in household. You get married, had a baby, got divorced. If you die, that's an SEP. Changes in residence. You may qualify for special enrollment period if you move to a new home, U.S. from a foreign country, etc. Basically the same SEPs minus the 150% federal poverty level. Okay, there's still lots of SEPs out there, folks, and you can always go to healthcare.gov and look up all the SEPs as well. Loss of health coverage is another one that's still an SEP. There's no better time than now to sell ACA. I just said all these negative things. Let's start talking about positive things, right? With all the new regulations, this OEP will be the stickiest your business has ever been. You don't have to worry so much about people flipping that. You write a policy, and guess what? It's still there tomorrow. That's great. And why is that important too? Is because it brings up the value of your book. If you ever want to sell it one day to somebody, making sure that that business sticks on the books is going to be something that that person buying it is looking for. And you're going to make more money because the retention is going to be higher. Carriers are cracking down on bad actors, so you won't have to worry about writing business one day and having it disappear. CMS is cleaning up the business, making it more stable and stronger foundation to build business on. CMS and the carriers are working on ways to move a book of business in bulk. I know this is a big sticking point for a lot of folks, especially if you're a call center or you're trying to sell your book of business. CMS is working on a way where we can notify the carriers that if you're wanting to sell your book of business to somebody, that CMS will be able to change it all in one big bulk time. It's not available yet, but the carriers are working on that with CMS as it stands right now. If you work for a call center and you have an agent that leaves you, you'll be able to transfer from one agent to another agent to be able to keep it servicing. Carriers are working on adding line of sight to downline agencies to add another level of transparency. That's great. So if you own an agency and you're under Messer Financial, before you had to go through each agent's portal to be able to see your book of business. But if the carriers are now able to have your own sub-agency portal, you'll be able to log in as the agency and be able to see all your downlines, all of their production and everything, and have full transparency and line of sight. That's huge. United Healthcare is already bringing it out. Ambetter is supposed to next quarter, first quarter of next year, and other carriers I'm sure will follow suit. The ACA rides like a wave in the stock market. We double down when it hits the bottom. Folks, this is the year. If you can get a strong book of business this year, a sticky book, a real book of business with real people, then you're going to go into 27 with flying colors, with a great residual, and you'll be able to crush it in 2027. Opportunities are everywhere. With disruption comes opportunity. It really does. And I can't think of much more disruption that could happen than this year. Aetna leading the market, that's a huge national carrier. All of those people are going to have to go somewhere. Why not you? No, why not with you? Everyone in the market is going to be affected in some way. You pick what you want to market. You want to do it based off the increased premiums, the subsidy reductions, carriers exiting, clients losing agents, because if those bad actors are no longer in the business, they're going to need somebody to help them. You pick what you want to market. Any of those. Disruption is everywhere, which means opportunities are everywhere. You don't want to, if everybody in a state is enrolled into a specific carrier and that carrier is still number one next year, is there much opportunity? Not really, unless you're just wanting to do a bunch of NPN changes or agent of record changes. The opportunities are when there's disruption in the market, and there's so much this year. Carriers who were number one in the area last year will most likely not be number one this year. That's just a fact, folks. And retention. Retention is the most important factor of your business. It is the main reason why you've chosen health insurance as a profession. If you don't retain your business, then you can never grow, and eliminates the purpose of writing the business in the first place. This is a relationship business. The best way to retain your business is through education, communication, and transparency. One of the main questions that I received from agents is, what's the best way to retain my business? How can I get people from stealing my business? Well, get your contact information into your client's phone as soon as possible. Why? Because then they have it. If they have questions, guess what? It's right there on your phone. And the best way to get in their phone, once you get off the phone, send a text message to them. That way, now you're in their phone. Now all they got to do is save your contact. Send them some type of communication throughout the year, birthdays, anniversary, pre-OEP, etc. I like magnets. I always promote magnets. I send magnets to clients. Why? Because magnets are something that people use. They put it on the refrigerator. The refrigerator is something that they look at every single day. And guess what people put on the refrigerator? Usually pictures of their loved ones, right? So guess what? Every time they look at their loved ones, they're going to see my magnet, my business card right there. There's never a question as to what was my agent's name? What was their contact information? How do I reach them? It's all right there in front of their face. Most importantly, make sure they remember who you are and that you are their contact for anything insurance related. Be that guy or girl. Be your client's person that puts their interests first. The first person they think of when it comes to insurance. Hey, I've got a question. I've got a claim issue. I have questions. All of this stuff is going on. I see online. I have people constantly calling me. Be that person. This will prevent poachers from stealing your business or clicking on random links on internet. I promise you, you don't think there's going to be random links on the internet where people are going to look at? And advertisements, I mean, my God, have you been on Facebook lately? Have you seen all the Medicare and ACA advertisements that are on there? But if they have that person, they're not going to click that. They're just going to call you and say, hey, I saw this advertisement. Is this true? And I always say this, the last bullet point, if your client does not know who their agent is, they don't have an agent. This is a relationship business, folks. Earn that override, earn that commission. Keep them forever. When can you enroll? Like I said, January 1st, November 1st through January 15th. In most states, some states changes are a little different, but all federal states are there, are November 1st or January 15th for 2026. If you're new and you haven't done this before the ACA, you got to do your FFM certification, request your employment insurance pay, and complete the carrier links. Why Messer? All of these, plus information, relationships. Again, folks, we are not backed by a huge hedge fund, right? We are an independent agency. Bill Rice and Roy Messer started this agency back in 2002 as two agents themselves, and they did it because they wanted to do it the right way. And because we've done it the right way, we valued the relationships that we have, we are now the size that we are, one of the top agencies in the country for both ACA and Medicare. And we provide more than everybody else. That's how we're able to compete. Those Spanish speakers, we also have Spanish. We even have Portuguese fluent reps here for you to speak to. What makes Messer different? We understand the challenges agents and agencies face because we've been there. I'm an agent myself. We've been involved with Medicare and the under 65 market from the beginning. We vest you from 100% from day one, no questions asked. We will even continue to pay you if you decide to transfer away from us. And also, folks, there's another thing that we even go above and beyond. In the event of, heaven forbid, something were to happen to you, we would pay your secondary and tertiary beneficiaries your commissions. We continue to pay you not only while alive, but also in the event of your death. And the most important thing that separates us from everybody else, we do the things we say we'll do. That's a pretty strong point. All right. Now, I'm going to, I mentioned to you guys that I had some things at the very end that I wanted to share with you that are very important, it's not even really released yet. Oscar and Better are going to be the two hungriest carriers. Anthem also wants the business, and United Healthcare wants the business, and the Blues. Okay, they're the ACA carriers that want your business. They want your enrollments. Molina is not going to be paying commissions in most of their states. Areas where Oscar is going to be very competitive. And you can get out a pen. Hopefully you're writing this down. Charlotte, New Jersey, Columbus, Cincinnati, Dayton, Ohio, Grand Rapids, Michigan, Des Moines, Iowa, Lincoln, Nebraska, Kansas, Mississippi, Huntsville, Alabama, Nashville, Houston, the suburbs, and possible Nashville and Kansas City. And they're also going to be very strong in Texas and the Fort Worth area. They should be in play in San Antonio, El Paso, and South Houston. For you Florida folks, that's going to probably be one of their biggest, most competitive areas. Broward, Miami, Orange, Palm Beach, Hillsborough, Duval, Osceola, Pinellas, Volusia, Pasco, Seminole, Escambia, Hernando, Clay, and Flagler. This is all Oscar. They are the ones really being aggressive. They want all the Aetna business. They want it all. I highly recommend, if you're not appointed with them, get appointed today. And Better, I don't have the specifics that I do with Oscar, but And Better is going to be competitive in all of Delaware, Florida, Kansas, Kentucky, Michigan, parts of Michigan, Missouri, North Carolina. For those of you in the Greensboro area, that's going to be a good one. In Western North Carolina, that's going to be a good one. And also for those of you in North Carolina, CareSource has pulled out of the market. They're also going to be competitive in Oklahoma, South Carolina. South Carolina and better to be competitive in the rural areas, not the cities, but all the surrounding area of the cities. And also Washington State. There will be other markets. These are just the states that cross the border. They look really good for Ambetter. United's going to have their spots. Anthem's going to have their spots. WellPoint's going to have their spots. Molina, like I said, is not going to be paying commissions on new business in most states. So if you currently have the only state that you probably have a book of business with Molina is Mississippi, and they are going to continue to pay commissions there. Now renewals, they're going to pay in all states, but not on new business. So South Carolina, Florida, Texas, no new business. It's not going to be commissionable. And one thing I want to say, folks, that we have to keep in mind is during the Inflation Reduction Act and this ACA boom, it caused a lot of bad business to be written, which is what's causing the carriers to not want the business. Some of these carriers. Oscar understands that they're cleaning up everything. So if you were ever going to double down, which I agree 100% with, now's the time to do it. Like if I went to a carrier last year and I said, hey, carrier A, B, C, whatever, if I told you you could raise your rates by 30% and you would still be the lowest in the market, would you take all the business? Every one of them would jump and say, absolutely. This year, they're increasing it by 30%, and some of them still don't want the business. We need to do a better job as agents to make sure that we write good business. Keep them on the plan that they're submitted with. The worst thing that you can do is enroll somebody on a carrier plan and then have somebody flip it to another carrier. Because then what happens is that carrier pays for the claims that were filed, and then someone moves them, and now they're out all the premium. That's not good business. We are vested in each other. The carriers are vested in all of us, which means that the more profitable the carrier is, the more they're going to want your business, and the more competitive they're going to be. And the more competitive that they're going to be, the higher the commissions, the higher the bonuses. Everything is better. The better the benefits for the members. But we have to write good business. So for the longevity of us in this industry, make sure that you do what's best for not only the client, but also for the carrier. Like I said, Oscar, Ambetter, Anthem, Cigna's probably not going to grow much this year. Molina's definitely not going to grow. The Blues will do all right. United Healthcare is going to do well. So I wanted to make sure. Now, again, folks, we're not able to quote it yet. They will have a window shopping period. Who knows when? Everything is delayed this year. Hell, the carriers haven't even released the commission information yet. As soon as they do, I promise we will get it out for you. We don't know commissions. We don't know bonuses yet. All the information that we do know is what I just shared with you for 2026. So keep that in mind. There's still a huge opportunity in 2026. If you're ever going to buy a right business, do it this open enrollment period, grow that strong book, and go into 2027 like a champ with a nice renewal stream and really get ready to open it up. And also, again, if you need trainings on these other products, the short-term medical, the indemnity plans, whatever, and folks also offer dental. Like you're talking about something that everybody's going to ask about. Offer an Emeritus, an NCD, a UH1, an Allstate, any of these carriers, all great dental plans. They're all going to need it because that's one of the first questions they ask. Well, does this include dental? And let me tell you, presentation is everything. If they decide, if you sign them up for a $0 bronze plan, it's really hard to sell them a $30 dental plan. But if they ask you for dental and they say, hey, yeah, does this include dental? You can say something like, well, let's see what I can do. I can bundle you. Everybody loves that bundle, right? Thank you, Progressive. I can bundle you a dental plan with this health plan for $30. That way they're not saying, well, this is 0 and this one's 30, right? Presentation is everything, folks, and they still need it. And one last point that I'll make before I wrap this up. The deductibles and out-of-pocket maximums are also increasing for 2026. They're going to $10,150. If someone's going to qualify for a $0 bronze plan or even just a $10 bronze plan, do you think that they're going to be able to handle a worst-case scenario? Do you think that they can afford a $10,000 medical bill? Absolutely not. There is a thing known as underinsured. And if you're not offering these indemnity plans to try to help with these lump sum payments to help pay for these deductibles, you're not doing your client a service. I know I would feel awful if one of my clients I sold a $0 Browns plan, didn't offer them an indemnity plan, ended up something catastrophic happened to them. They can't pay the medical bills and have to file for bankruptcy. Did I really do my job? So yes, from a greed standpoint, from the agent standpoint, you're going to get paid on 2 products and they pay very well. But from a standpoint, from a client's perspective, they are now able to handle the worst case scenario. And what did I say at the very beginning of this presentation? Was that insurance is peace of mind to know that you're taken care of in a worst case scenario. Keep that in mind, folks. Do what's in your client's best interest. Do your, and also your own. And I want to thank everybody again for attending today. I hope this was informative. And Jeff, I'll turn it back over to you. We can answer some questions.
Thanks, Mike. A great presentation. Getting a lot of love out there from the folks that attended today. Let's talk about Georgia for just a second. I know there's been some confusion the last couple of years. Georgia Access didn't roll out in the smoothest ways possible. If I'm a new agent, do I need to do my FFM certification and Georgia Access training? And where can I do those enrollments for those people I'm trying to work with in Georgia?
If you are only selling in the state of Georgia, then you don't need to do your FFM certification. You only need to do your Georgia Access. You can do your enrollments directly through Georgia Access System, or you can do it through MyMFG or any enrollment platform for that matter. So you can do it anywhere. And I'm glad you mentioned, Jeff, Georgia, because Georgia is going to have some major shakeup with their carriers. Kaiser Permanente is coming in with with almost insanely low rates and will be the carrier to beat in Georgia. If you are not appointed with Kaiser Permanente, get appointed today. Alliance is another one that's going to be extremely competitive in Georgia. Ambetter is not going to be competitive in Georgia this year, and they had a huge market share last year. Again, disruption is key, and I can't think of a better one than Georgia.
Awesome. Let's talk a little bit about those folks that are on the outside looking in as we go into 26. Again, what are some of those alternatives, Micah? If I'm somebody that's just above the subsidy threshold, I'm not going to get anything. What are my options again?
Well, my number one suggestion for those folks that are not getting a subsidy is the catastrophic plans. I mean, they really are good plans. Again, 3 office visits at zero copay a year, preventative care completely free of charge, full medical, guaranteed issue, affordable rates, 100% plan. So that would be my number one. Number 2 would be to go and look for short-term medical plans. But even those folks are kind of are pretty expensive. But the nice thing is they did open it back up in most states where you can write a 3-year short-term plan. And they are beneficial for those that can get through underwriting. So if they're healthy, please make sure you're quoting it. Compare that to the catastrophic plans. And I'm going to tell you what, from an agent standpoint, commission standpoint, short-term medical pay amazing commissions. They're still in the percentages. So between the catastrophic and the short-term medical, those would be my go-to. You can also look at UH1 and Allstate and some of the other carriers. And Pivot Health is another one for short-term medical. And their indemnity plans as well. I know if you've got some clients that are looking for something more like with copays, look at the Health Protector Guard or Health Guard Protector. I always mix it up from UH1. Pays you for just about everything that's that you go in for. Go in to see a specialist, a primary care, whatever. It pays you directly on top of the healthcare plan that you have.
So I was going to just ask, Micah, for those guys that are with us today that have been doing this a long time, that kind of takes us back to the days of where we were bundling different products together to create a great umbrella of coverage. What are some of the indemnity plans or some of those carriers that you like to see paired with maybe a catastrophic or this past year a bronze plan to help provide that care? What would you do?
Yeah, great question. So, Manhattan Life, for example, they've got an amazing lump sum benefit. If you get admitted to the hospital, they have different amounts, obviously based off of how much you want to pay in premium. So they have like a 2,000, a 3,000, a 5,000, and these are lump sums. So what I was talking about earlier is these deductibles are extremely high. If I could go into the doctor's office and get a lump sum payment of 5,000, even up to $10,000 lump sum payment to pay that deductible in full, I mean, is it worth $30 a month or $40 a month to know that in the worst case scenario, you're going to be covered at 100%, that you don't have to worry about medical bills? To me, it is. If I just bought a $0 bronze plan, could I afford $30, $40 a month to pay for an indemnity plan that gives me a lump sum payout? And a lot of them have it. You know, UH1, like I said, they have all different kinds of benefits. Allstate is another good one. You know, they all have their niches. And again, I would highly advise you to speak to a marketer about these plans. And they can go over exactly what you're looking for. But we also have webinars that we've done with all of these carriers. So you can go back on our website, messerfinancial.com, and access all of our past webinars that we've done and watch them, because each one has their own niche. I mean, I could be here all day talking about all the different carriers, but I will say that on my MFG, which for those of you that don't know, our quote enrollment proprietary system does ACA, Medicare Advantage, and ancillary products. So you can quote Manhattan Life and all of their awesome indemnity plans today, all in one place. You can also quote enroll Emeritus and their dental and vision plans. All kinds of different options, folks.
And Michael, let's talk about that as we get ready to close here today. MyMFG not only allows you to do Medicare, it allows you to do ACA, it allows you to store your client information compliantly, and it also allows me to record my enrollments, correct? So if there was ever a question of, am I really the AOR? Did I really do that enrollment? The carrier can contact the agent, contact us as the upline, and we can provide those recordings in short order to help protect that agent, correct?
All in one place, exactly. We want to be the one-stop shop for everything that you need, and we're providing these. And folks, this is not a cheap thing for us to be able to create something like this. I mean, we have an entire team. And let me tell you, there is a huge advantage of actually owning your own platform rather than using somebody else's. If you call me up and say, Micah, you know, I could write way more business with my MFG if it was pink with white polka dots instead of blue, then guess what? I could have that thing pink with white polka dots for you by the end of the day. If there's ever an issue, you let us know, and I can walk right down the hallway to the guy who created the whole system and walk into his office and say, hey, this is the issue that I have, and he can do it for you. We are all under one roof out of Charlotte, North Carolina. Again, to have it all in one place, local and accessible, that's a game changer.